As long as you enjoy the process, set some really big goals, you actually can be more motivated when you have a bigger goal. Whatever you think you want to do, whatever you think your dream is, maybe think about 10xing that and surround yourself by other people with the same mindset.
Whatever the mind can conceive and believe, the mind can achieve.
Welcome to the Dream Big and Think Different podcast, where we inspire, impact, and empower.
Progress is impossible if you always do things the way you have always done things.
It's time to dream big. Here's your host, Dr. Sachin Maskey.
Hello everyone, welcome to another episode of Dream Big and Think Different podcast, where our mission is to inspire, impact, and empower millions of people. I'm your host, Dr. Sachin Maskey, and today we have very special, super talented, another dreamer and another fellow doctor, Dr. Amir Baluch, who has a very inspiring story that we all need to hear. I'm very honored and super excited today to have in our show, Dr. Baluch. How are you doing today?
Hey, how's it going, Sachin? So very much been looking forward to this podcast. I think you got a good mission here behind your podcast. So everybody needs to be inspired, especially during these times, post-COVID and pre-recession, I would say. So
Thank you
for this.
Awesome. Thank you, man. So anyways, let me start with a quick bio with Amir, and then we can, focus on our topic today and we'll go from there. So again, let me start with a quick bio. So Amir Baluch is a doctor, he's an anesthesiologist. He's also an investor, serial entrepreneur, and a fund manager. Dr. Baluch has over a decade of experience in private equity and security with Series 22 and 63 license. 4 of those years working on the broker-dealer, where he trained to evaluate opportunity, negotiate, mitigate risk, and underwrite multimillion-dollar acquisition. He's also an internationally best-selling author of the wealth management book called Make It and Keep It, New Age Wealth Strategy for Physician. I'm actually haven't read the book, but I'm planning to read, and a regular contributor to the Forbes magazine. He and his team has participated in or managed over 80 investment projects valued over $700 million. He serves on advisory board for multiple life science companies, aggregator entities, and consults for multiple clinics worldwide or nationwide. Dr. Baluch has a degree in the biochemistry from Trinity University and obtained his medical degree from Texas Tech before finishing an anesthesia residency at University of Miami. Again, welcome to the show, Amir. Great to have you today.
Thanks. Looking forward to being here.
Sounds good, man. So today's we are focusing basically with a benefit of true diversification and personal finance and wealth management. So before we dive in, I would like to start with my first question to Amir. Who is Amir and why he's in this world?
Well, besides being a doctor, like you mentioned in that intro, I kind of want to step back a little bit and say, why are any of us here? Because really, I think at the end of the day, everybody has their own purpose, but at the same time, there are things that everybody can do to help each other. So I'm not sure if you're familiar with the term ikigai. Have you ever heard of that? Yeah.
Absolutely.
So basically you want to find something that helps the world out, something that you're good at, something that you like to do, and something that could provide a living for yourself. And that sounds pretty easy, but I think a lot of people go through life and they don't find that. So for me, that was being a doctor. I didn't know what ikigai meant. My dad was a doctor. I was like, okay, well, I'm just gonna do what my dad does. Why not? So just like most kids, I'm just gonna do what my parents do. So for me, my purpose of being here is to help people heal with medicine and sciences. And even now that my role has changed from being a doctor to being more wealth management and fund management, I'm still in the life sciences. And I still feel that my purpose in life is to help people through funding life sciences or somehow through medicine. That's one of my main purposes in life.
Sure, sounds good. Me and Amir have met a couple of times. Actually, we met this year in Dallas, and he's also still in Dallas. I love Dallas, by the way.
Great, come on down. This is
So
actually the time to go but to come down before it gets really hot in the summer. So
yeah. So definitely, I'll give you a buzz when I come there. My next question, since this is the dream big and think different, I would like to know, going back to your childhood, just want to know what was your childhood dream?
well, even in school, I think because my teachers knew that my dad was an internal medicine doctor, they were always kind of saying, hey, for career day, talk about being a doctor. So some of it almost seemed like it wasn't a choice, but it kind of was a choice. So
Hmm.
all through junior high, high school, I'm thinking, okay, what college do I go to? Which ones have the highest acceptance rate into medical school? And I was just thinking this the whole time. So uh, so basically, that's what I was thinking is, hey, my dream is to be just like my dad and have a clinic and practice medicine and help people feel better and carry a pager. And that was pretty much it. And then over time, it kind of evolved from there. But I did at least accomplish that, but without the clinic aspect, which for me is a good thing. So, right.
Yes, absolutely. Yeah, same here. I mean, my dad wasn't a doctor, but he always believed in our like that for us in the since I was born and raised in Nepal, so we have kind of a limited option, and doctor, either doctor, engineer, or pilot. Those are three
Right.
options we had actually. So, but anyways, so thank you for sharing that. And my next question is, since you are doing so many things, and I really want to know who and what inspires you and drives you to be productive every day.
Well, there's a couple things. I think going back to when I was in school, I used to like playing sports and video games. And
Mm-hmm.
so these things are pretty much associated with numbers. And I really have thought about this. Like, I thought about this a lot. Like, why do I like doing what I do? But even in
Right.
school, any doctor watching this or healthcare professional, I mean, you're trying to get an A in the class. And what's an A? Over a 90.
Yep.
So for at least a decade of your life, the teachers you look up to are deciding your fate based off of numbers. So I think we've become very focused on numbers and winning and beating out competition because getting into good colleges and universities and things like that is competitive. So I was very competitive. And that's part of what molded me to do what I do. And now I like to, I compete against myself more than anything else. So, for example,
Absolutely.
even in college, I would help other people with their homework assignments in our biology lab or whatever if they need help. But I was really
Hmm.
competing against myself. Hey, how good can I be? Even though if I'm helping them and we're all graded on a curve, right? At least at Trinity University, we're graded on a curve. So it kind of hurts me to help other people, but not really because I'm really just really battling against myself. So that's kind of what drives me is trying to be better than I was before. And all those
Absolutely.
days of being video game champion in West Texas for Mortal Kombat, Killer Instinct. I beat all the Nintendo Power Times back on the Nintendo 64. If
Really.
people even remember what that is. So that was kind of what drives me is just setting some metrics and KPIs and just trying to be the best that I can be. And then in the
Absolutely.
meantime, if you could help some people too, a lot of studies, which I've recently learned just in the last like 5 or 10 years, now I'm trying to study the science of happiness.
Hmm.
Really, the number one thing that makes people the most happy. Well, number one is actually having a gratitude journal, being
Right.
grateful for what you have. But number two is helping people. So now, how can I do things where I'm competing with myself and helping the world as much as possible? That's really what drives me. And then now I'm even more motivated than ever now that I know all that.
Man, that's really resonating to me. Also, that's absolutely true. You just said, number one is definitely gratitude journal. I've been doing this for a couple of years now. Every day I put down three things I'm grateful for, and
Awesome.
that gives you source, it's a joyness and happiness, and also
Right.
serving others is another motto. I have the same thing. I agree totally.
Very
So,
cool.
yeah, thank you for sharing that again. And I guess I was very curious. Like Amir, when I first met you, I think a couple of years ago, we started talking, and you've been always very helpful, and I really appreciate what you do. But I wanted to ask you today, how did you become so interested in personal finance and wealth management?
It was kind of unusual for me. So all through high school and even most of college, I wasn't that interested in it. I actually didn't even have a concept of money. I just know
Yes.
that I needed money for my protein shakes, my gym membership, um, and aftermarket radio in my car, and maybe
Hmm.
some subwoofers. Like that's kind of just what I was into, and that stuff didn't cost that much. So,
Sure.
but what happened was while I was applying to medical school, two things happened. One, I didn't get into medical school.
Oh, really?
So the big blow, everybody thought I was a shoe-in. The acceptance rate at Trinity University is over 80% and
Wow.
3.6 GPA. And then what happened? I didn't get in. I got my rejection letter. It didn't make any sense.
Oh, no.
And so, I felt a little bit depressed for a while. And I thought to myself, what if I never get in? I should never trust any one path for myself ever. That was already implanted in my head when I was 21. So I was thinking, okay, I'll take a year off. Let me do some more research, right? If any doctors
Hmm.
on here, they know the story. Do some
Yes.
research, get some publications, get a higher score on the MCAT, right? So
Right.
I did all these things. I did all that stuff, and within a couple months of me doing that, my family actually went bankrupt. So my dad, who is a busy internal medicine doctor,
Wow.
started getting letters in the mail, and so he owed the IRS some money. A bunch of other things happened, and we had a lot of homes foreclosed on. So we all moved
Wow.
into a one bedroom apartment. That was $250 a month in Midland, Texas. If you can imagine, what you get for only $250 a month, right? But we we're trying to save as much money as possible. We sold everything that
Right.
we owned, clothes, old CDs, well, whatever it was, beds, pillows. We literally just had what do you call that? Like an estate sale, and we just kind of sold everything, got some cash.
Hmm.
And I was kind of staring at the ceiling. I'm like, you know what? I never really want this to happen again to me. So let me figure out what went wrong in the finance world. I couldn't really figure it out, like how this happened. I thought doctors make a good amount of money. So
Yeah.
after that, I read probably at least in either audio or physical book form, at least over 400 books on either leadership, sales, business, financial planning, things like that. The math
Hmm.
behind investing, basically. Went to
Sure.
courses, masterminds. I think the education now has cost me about 400 grand at least.
Oh.
So I just want to be a voracious learner of that and become 1% better. And so then, you get really interested in it almost out of necessity. And then at some point, when everything starts coming together like the matrix, you kind of see the beauty behind it. Like
Hmm.
you see how everything comes together. And I've never seen it like that in my life. So somebody speaks about anything financially, I know where that fits in. Whereas years ago, that was not the case. So now it's actually like a hobby of mine and I enjoy it. But originally it started out of necessity. So it's gone from a necessity to something that I enjoy. And, I think you already know the rest of my story. Like after my anesthesia residency, immediately got my real estate license. Same year, I
Hmm.
got my securities license, joined a broker dealer, which basically broker dealer funds investments after doing a very stringent amount of due diligence. So they only allow like the top percent of managers. They're not allowed to lose basically, because if you
Hmm.
lose investor money in a broker dealer, like the whole broker dealer value goes down or you go out of business basically. So it was cool to get mentorship from them. And then now I'm constantly learning, with people like you and different masterminds that we've attended and conferences and sharing knowledge with
Absolutely.
other people. It's just a nonstop learning experience.
Absolutely. Absolutely. Yeah. The knowledge is the power. We all know that. So I agree with that. Do you still practice, Amir, as anesthesiologist?
Yeah. So right now I'm doing maybe 7 or 8 days a month of anesthesia. And then the
Okay.
rest of the days just working on Baluch Capital basically and the different
Oh,
projects that we have. So pretty much full time that. And then I still like to keep my clinical skill sets basically. at least for now. So
Yeah, same here. Yeah, I plan to work once a week, so hopefully we're on the same page on that too.
right.
So, what exactly is the Baloo's capital?
Yeah, so we're a little bit different than other companies that have the word capital at the end of it. So a lot of those companies deal with public securities, but Baluch Capital we're more like an investment platform that deals with
Mm-hmm.
alternative investments. So not
Mm-hmm.
only do we provide access and information and education about alternative investments, but we're also pre-vetting deals. And most of the
Mm-hmm.
time right now, we're the sponsors, or somebody on my 28-person team is the sponsor or the operator, I guess you could say. So all these things require some type of operator to make the wheels run, right? Even the mutual fund world, you have some fund manager that's doing asset allocation, right? So
Mm-hmm.
uh, and then what we do is we don't just focus on one asset class, which I know some
Mm-hmm.
people are like, oh, just focus on one asset class, but that's actually
Yeah.
high risk. And so a lot of people thought, recently, I know a lot of people thought that multifamily was the holy grail. Um, but I actually
Mm-hmm.
dumped on my multifamily in 2020 because interest rates were the lowest, cap rates were the lowest. It's eventually going to go the opposite direction,
Mm-hmm.
right?
Right.
We want to be there. So even multifamily, which was considered the
The bread
safest
and butter.
world, and people relying on this cash flow, now at least 23% of those people are getting like no cash flow. So it's been very stressful for those people, but
Absolutely.
doesn't affect me because we're a multi-asset platform. So we saw
Mm-hmm.
this happening. We diversified into fixed income products. We moved into ground up development, which is actually very favorable right now, especially in Dallas, and other things too involving e-commerce, life sciences, like our second biotech fund. We're looking into trading bots as well, life settlements, a couple other things that I've mentioned on my virtual summits before that maybe some people have been a part of.
Sure,
So
sure,
that's our
sure.
goal.
Absolutely. So, man, so you're trying probably you're like still in anesthesia. You have Baloo's capital. You mentioned a couple of real estate things you're doing. So, how do you find the time to do all this?
Right. So luckily, I started a little bit slow with the broker dealer, and they were doing about 80% of the work. And I was learning as I was helping them fund certain deals.
Mm-hmm.
And basically, they held my hand through a lot of things, and they showed me some systems and processes on how they scaled. And really, that's what it's about. You have to have systems, processes, and a team. So, for example, as I grow a fund or go into a new asset class,
Mm-hmm.
definitely going to have partners if you don't have experience. So you got to partner with somebody, divide up tasks, and eventually you had to do an 80-20 on your value. So, for
Mm-hmm.
example, 20% of what I do is responsible for 80% of the
Of the
success.
result.
And for me, it's
Absolutely.
mainly the strategy, um, overviewing the underwriting, and the negotiating. Those three things, that's actually what makes my investments tick and gives us basically higher returns with lower risk compared to a lot of other things that are out there. But then there's another level. You can do
Mm-hmm.
80-20 on that 20. So what's
Right.
20% of 20? That's four. So 4% of what I do is responsible for 64% of the results. And that remaining 36%, now that's outsourced to other teams. So, even on acquisition and even some of the underwriting that I used to do, now I have three people that do underwriting for me in house with my own, assumptions on the deals. If anybody's looked at an Excel file or underwriting thing, they know what I'm talking about. The
Sure.
relationship building is where I spend a lot of my time, and the strategy and knowing which sectors to go into and when to go into them. So that's the 4% that I do that's responsible for the majority of it. We also have something called a level 10 meeting. We use a system called Entrepreneur Operating System. So what do you do?
EOS.
EOS. Yeah. So with
Yeah.
EOS, you have a level 10 meeting. You meet with your team 1 hour a week and you go over your KPIs, key performance indicators. So for example, let's say if you're a capital raiser, right? You
Mm-hmm.
probably want to have the number one thing you need is people to know who you are and have them as email subscribers, right? So when you have something, you could email it, right? Because it takes a long time to make a bunch of phone calls, right? Probably better just email. So if that's the top KPI, okay, now what tasks do you need to do to reach those KPIs, right? How do you get 5,000, 10,000, 50,000 subscribers, right? And so you start prioritizing things. So that's another thing we do is calendar blocking. So let's say something happens today, like, okay, this podcast is scheduled today, right? It's going to
Yep.
happen. I'm going to show up. I don't really even need it on my calendar. Like I have to show up. So there are some things that are important and urgent. You're going to do them. It's going to happen. Your car needs gas. Okay, it's important. It's urgent. You're going to fill it up, right? So these things are going to be taken care of. But people forget the important but non-urgent tasks. Like, hey, maybe you need to expand your network over here. Or, hey, maybe
Sure.
you really need to work on cleaning up your presentation for whatever, right? These are multi-hour or multi-week tasks. And so this is what
Absolutely.
gets procrastinated on. And that's why people are like, man, I don't know how you do all that. Well, if you just block off time to do those very important, non-urgent tasks, it will actually get done. And I try to do it around 5 in the morning, sometimes 4:30 in the morning. Like I just noticed between 4:30 and 11 a.m., I don't get a lot of phone calls and interruptions. I can get a whole day's of work done uninterrupted and focus on the important things. And 11 a.m. and on, I don't even care what happens. I'm basically just being reactive and handling, phone calls and meetings and text messages coming in. And then after 5 or 6, we can start winding down. And then I do some things that don't use a lot of brain power, like checking my emails. So
Absolutely.
that's
And
really
that's a absolutely, absolutely. Sorry. Yeah, that's a really very good advice to people who are listening, and it's all about time management and something called mind management. I think he talked about 80-20 rule, and those are calendar blocking, time blocking, delegating, outsourcing. Those are the things I think and how I do it, like podcasts, practicing, learning music. I have a family time, dating, all those things are all in the calendar to do it, so I appreciate you sharing that to the
and
people.
it's especially true for the doctors because as if there are doctors listening out here, we're used to calling
Yes.
all the shots and doing everything. We feel like we have to do everything. Like when
Yeah.
we go to school, nobody's going to teach you something. You kind of have to learn on your own. You're doing your own homework assignments. You're doing your own projects, right? So it's all on you all the time, right? But in the real world, especially when it comes to business or if you're trying to create a side hustle or anything like that, you can't do that. You're going to have to work as a team, and you're really going to have to get sorted out on your priorities on what matters. So
Absolutely, absolutely, totally agree. Hey, Amir, so I wanted to ask you one more thing about how did you or when did you actually get started in the world of securities?
so let's see. I finished my residency in 2010. So it was 2011, a few months after I came to Dallas, where I got my securities license and joined a broker dealer here in Dallas. And then in that world of securities, then we learned, and by the way, there was like you couldn't advertise anything online back then. This is all just like handshakes and in-person meetups. You're not even allowed to talk to anybody online really about what you're
Hmm.
doing unless that message was approved by the broker dealer. Like it was
Yeah.
way strict back then, like way strict. I know now people get ads and invest in this and that and whatever, but the world of securities is pretty strict on what you can say and what you can do. Like it's pretty strict. But I knew that, but I wanted to know how strict it was and what the rules were, so that one day I could swim with the sharks. And so it was worth it, at least for me, to get licensed up, to know what the rules are, and actually just basically I had a job working in securities. It was like a job. Almost imagine doing your residency over again, but in security
Absolutely.
instead of something in medicine. So that's what I did for about 4.5 years or something like that. It was like another residency, basically.
Wow. So wow, that's amazing, man. So now you have been doing this for 10 years, almost more than 10 years. And I wanted to hear from you today's actually topic about what is actually true diversification, and why you think this different asset class you've been talking about a few minutes ago will lead to a financial freedom.
Right, right. So I think a lot of people So I'm going to back up a little bit about how this retirement concept came up. 100 years ago, nobody's talking about retirement, right? How are you going to retire? Nobody really is like retired. They just hope that their kids take care of them when they get old and can't work. That was retirement, right? But in 1979, the government figured out, you know what? I can't fund pensions all the time. Let's create these 401ks and have other people self fund. Let's put the financial obligations on other people. So they created 401ks and these retirement accounts. And then
Hmm.
when the new regulation or new product that the government puts out, people make a business around it. They're called
Hmm.
financial advisors. And so financial advisors are basically just going to advise you to invest in things they get commissions on. And they say
Absolutely.
you're diversified because, oh, you got some Apple, you got some Tesla, you got some Walmart. But the thing is, all those things are in the same bucket. It's in the public stock market. When the public stock market is down, like it was last year in 2022, everything is down. Even if these companies are increasing their profit quarter to quarter, the value is down. And so that's the issue that the correlation we use is called correlation ratios. The
Sure.
correlation ratio between investing in Apple and Walmart and Tesla, all those things, is basically 1.0. Basically, when one goes down, the other one goes down. For the most part, correlation is very close to one. So to be diversified, you want to have assets where the correlation is less than one. So, for example, uh, if somebody invested in Bitcoin, if you look at the correlation ratio, Bitcoin just marches to its own beat. Like it's not correlated to anything. It just does whatever the heck it wants to do. So, like, but so the correlation ratio is very low compared to the public stock market or compared to anything, real estate, whatever asset class you want to talk about. Then real estate, not necessarily public REITs, which are a little bit more correlated to the public stock market, but private REITs are less correlated to the stock market because other
Hmm.
things drive it other than emotions, right? Because emotions,
Sure.
stock market, a lot of it's driven by emotions, supply, demand. That's a whole other topic. I could talk 3 hours on that. But in the private world, it's more
Hmm.
about ground level management, controlling interest rates, and relationships. That's actually
Hmm.
what's control. That's how you mitigate the risk. And then in private equity, which I love, and most high net worth people have about 30 to 35% of their portfolio in private equity, which means privately owned businesses. Opposite of
Sure.
public stocks, private equity is same business. It could be publicly traded if it's big enough, but they just stay private. Well, these things, they pretty much, if you have good managers, the valuation is always going up, but you just don't have liquidity. And it's really not as correlated to the market. But we do
Hmm.
notice that when stock market goes down and there's fear slows down investments into the private equity world. So private equity valuations usually trail trends of public equity by about 6 to 9 months. And so if you know that, you can actually do some sort of timing and strategy right there. I don't give all my strategy and why I do what I do, but there's reasons to get private equity big time right now when I can get values at 30 cents on the dollar compared to last year, and there's nothing wrong with the companies. They're turning higher profits. I can just get values like 70% discount. So, and then you have
Absolutely.
real estate too. You could directly own something. Uh,
Hmm.
that's great too. And there's also fixed income products which are basically like arbitrage plays. So, for example, we have an e-commerce lending program that pays 18% preferred return. We basically lend out at 3% a month, and we're giving half of that to investors. And it doesn't
Hmm.
matter. Stocks go up or down. Who cares? Real
Hmm.
estate burns to the ground. Okay, whatever. Interest rate goes up. Whatever. We're just doing this arbitrage play right now. So, and it's going to work, regardless of these other markets. So I think the correlation of that, I haven't done the math, was probably like 0.25. So you get really good diversification with these fixed income products. Other ones, like there's also products where you could invest in medical liens, where people are buying liens at 10 cents on the dollar and they go collect it and they make, they double their money, but it might take 2, 3 years, right? So there's all these arbitrage plays which have nothing to do with stock market or real estate or crypto or anything. So that's why we're multi-asset, because no matter what happens in the world, that one thing that happens will not affect your whole portfolio, which unfortunately a lot of Americans have. Like some have like 95% or more of their 401k or retirement in public stock market, right? So when it
Hmm.
loses a third of its value, what are you going to do? Now you got to, work another 7, 8, 10 years just to get back to square one. And then once
Sure.
inflation hits, that value, when you get back to square one, the value of the dollar is half of what it was. So now you're still behind, right? And that's why
Absolutely.
most doctors can't retire, including my dad, who's one of them, and he fit into that boat there. So that's the reason this message is so important. People might want to even just rewind what we just said the last 3 minutes to really understand it and make sure it doesn't go in one ear out the other. Like if you're not truly diversified, uh, this can be a ticking time bomb for you. So, and we've seen it already in the past, and just people just because of tradition and what financial advisors in the business world, because retirement is a business, the business world of retirement is telling you, hey, dollar cost average, hey, just be in it for the long run, right? They got to keep the
Hmm.
money in these assets that are all correlated so they can make their commissions, right? So it's really not, and
Yes.
also not fiduciary. So anyway, that's probably the most important thing I could get across today is that is just really look into that and understand that most people's portfolios are pretty high risk. They just mathematically high risk. So
Sure. Yeah, I mean, I guess that was a very important thing that you just mentioned, and I truly believe on that too. For me, I also diversify in something called hard asset. I'm not sure you do that. Gold and silver is one
yeah,
of
that's
them.
great.
Yeah. So, I think you mentioned a couple of things. I just want to rephrase this. Crypto, I think you said cryptocurrency, Bitcoin is one of the asset class. Private equity is the big one. You mentioned about real estate, REITs, arbitrage with e-commerce and medical liens. I think list goes on, but both those are the basic. Because right now, what do you think the traditional investment? Why those are risky? I mean, you already told a little bit, but what are those like normal people do?
You mean people that are almost 100% in the public markets?
Right, like doctors, for example, like what are those common traditional investment they do and why they are risky?
Well, that's where the marketing dollars are, right? So the marketing dollars are behind traditional investments.
Hmm.
Another thing, not only that, but where the big broker houses like Morgan Stanley, Goldman Sachs, like, if you get a financial advisor there, they actually say that these alternative investments, which is the world that I live in,
Sure.
alternative investments are risky, and what they're doing is not risky. So on paper, that's what it says, but you can actually measure risk. Like you can measure it with Sharpe ratios, Sortino ratios, which is a whole other 2 hour talk.
Yep.
So if you have to ask me about it, let me know. But if you look at it mathematically, their stuff is actually higher risk than the alternatives mathematically. But on paper, they're saying it's not because the way that they're insured away from lawsuits, if they have certain products and these
Hmm.
products have given a little stamp of approval from their broker house, there's no liability. So if you have no liability promoting something and you also get commission on that, wouldn't you just promote that? Like why you want to promote something that gives you liability? Also, they're not allowed to, and I didn't know this till I joined the broker dealer. If
Hmm.
you give advice or if you advise somebody to invest in something that your managing broker or broker house does not support, that's called selling away. So for
Hmm.
example, let's say when I was with the broker dealer, it's actually one of the reasons I left. So people come to me, I'm like, yeah, I got these multifamily deals. We've done about 600 million in multifamily and hard money lending. So if I said, hey, actually you shouldn't do this, you need to work with this marketing company and grow your clinic. Hey, actually, you need to get something where you could depreciate faster. Why don't you just buy your own rental property, right? So that's called
Right.
selling away because an investor came in and instead of showing what the broker dealer has, I'm showing them what they really need. So
Yeah.
it took me a while to understand that for me to do what's right, to really do what's right for the investor, I had to even leave the broker dealer world and just do my own thing. So,
Wow.
so it's really about liabilities,
Mm-hmm.
where the commissions are, and things like that. It's not really about what's right for the investor, and it
Mm-hmm.
takes a long time to understand that. Like it took me more than a decade to really understand that. I was been investing since I was 17,
Right.
until maybe I was like sometime in 2012 or 2013. It was like about 10 years ago that I kind of realized that.
Absolutely, absolutely. Yeah, thank you for sharing that too. And I wanted to shift the gear a little bit about the hot topic we have, I guess, in this environment called inflation. And I know
Right.
you have a lot to say about that. So, what do you think about inflation now, and how can people protect themselves?
Yeah. So this is pretty interesting. So we know inflation's coming, right? And first, what is inflation? Basically, the when you have a devaluation of a currency, that's a simple way of looking at it.
Yep.
The reason it's happening in the U.S. is because close to, don't quote me on this number, but it's close to 80% of the dollars in circulation have been printed since COVID, since 2020, which is like 3 years. So imagine if you
Wow.
have at least 4 times more dollars in circulation, and those dollars lead to more credit being issued, right? So
Right.
let's say there's an extra 100 grand the government just printed and gave it to me. Now the bank will give me a $50,000 credit card, and I spend that 100 grand, uh, working with you, let's say, for example, and we do a podcast together, we spend on marketing, but that money's in the bank. Now the bank will give us another 50 grand there. Now this 100
Yeah.
grand is turned 200 grand, right? So like there's too many dollars and there's no intrinsic
Correct.
value of the dollar, right? So what does have intrinsic value? Okay, a roof over your head, eating a turkey for turkey dinner, right? You're getting X amount of calories. You need the calories for energy. That's like there's some intrinsic value there. so
Absolutely.
so now what people want to look at is what is a hedge against inflation, and really people with assets, those assets will adjust for inflation. So for
Hmm.
example, right now I got this roof over my head, right?
Yep.
Uh, it's probably going to double in value because the value of the dollar is going to get cut in half. But
Hmm.
people think that, oh, the value of my house went up. It's not really that the value goes up. The value of having a roof over my head in Dallas has pretty much been the same for a while. Our population has only increased 17% in about a decade, right? But
Hmm.
my home value has doubled in like 7 years. So, but that's showing how much the dollar has come down. It just takes more dollars to buy the same amount of value of
Hmm.
having a roof over your house in Dallas. Gold has intrinsic value. Why? Because there's not much more being made of it. Same with Bitcoin. Bitcoin has a fixed amount of uh, availability, right? I think it's like 21 million
Exactly.
Bitcoin. And that's it. And probably 4 million of that is lost. So there's really like 17 million Bitcoin that you can actually have access to, right?
Yeah.
So, uh, so whenever you invest in these things that adjust for inflation, you're going to be safe. This is actually a time where people can make a lot of money. So if you look at Warren Buffett, you look at George Soros, they hit inflection points during recessions and during
Hmm.
times where there was high inflation. So if anybody's listening out here, if you're sitting on cash, that's probably the worst thing you could do.
Yeah.
Like you're losing at least I'd say 8% a year at least. The price of a turkey went up 22%. Price of eggs almost doubled in a year. Like,
Absolutely.
what's really going on with the value of your dollar? Or if you have cash flow producing assets, like if you have a rental property and there's positive cash flow coming from rent, well, rent is going to adjust for inflation also. It gets
Hmm.
a little bit more complicated because it comes to a point where it can become unaffordable until wages go up. So it's kind of like a little bit of a lag. But for the most part, rent will keep going up. And if it's not affordable, well, now you're going to see the macroeconomic trends will be shifting in favor of secondary and tertiary markets. So, which is another topic we could talk about. But we want to start looking into those type of things that hedge against inflation and get the heck out of cash if you can. Just get the cash you need for emergencies, or even like a line of credit, which is what I do. So try to keep like 7 figures line of credit ready to go, and then I get my cash to work, and put it into things that produce income or will hedge against inflation. So if anybody's listening out here, this is how you're going to prevent yourself from losing a lot and also making a lot, because you can have that inflation drive the price of your assets up. You're going to ride that wave instead of drowning in that wave.
Yeah, totally agree what you said, and I think most importantly, besides inflation, also one we need to factor in taxes. So there are two
Right.
destroyers of wealth. I call inflation and taxes. And if you can hedge against those two things, I can surely assure you that you're going to go way ahead of your financial
Yeah.
treasure, track.
Let me know.
Other thing,
Let me know if you want to go halves on a place in Puerto Rico.
yes.
I have even thought, hey, should I just become a Puerto Rican citizen and just pay you like 4%? So
Absolutely. So again, another thing is cash is Robert Kiyosaki tells about cash is trash. Basically, and
right.
especially right inflationary moment. And you're saying exactly. So I think this is very very important things we have been discussing, and hopefully people listening or watching this will get some value out of it. I wanted to ask you another question about your. What are some examples of investment that you have people investing right now?
So some of it is just based off demand, and some of it is just about opportunities. We're a very opportunistic firm. So right now, private equity, we're closing out our second biotech fund. The first one we're up about like 6.2x, and
Hmm.
the second one we got to close it out because one
Did
of
you
our
say 6.2x?
right in about 5 years, and
Wow.
and the second one's doing about the same, but we started in just about like 2 years ago, I think. Right around COVID is when I launched that second one, because we could get some pretty good valuations during
And this is
COVID.
biotech, correct?
Biotech, right? Biotech and med tech. I just like to say life sciences, really, but that's like the big umbrella term. Biotech technically is reserved for pharma, and we don't do a lot of pharma though, but we do a lot of med tech and
Hmm.
software, SaaS, like AI with SaaS is really hot right now for diagnostics, especially. And
So these
so
are a 506 offering, or it's a
yeah,
506B?
they're all 506Cs. Everyone is a
Okay,
506C that we do.
sounds good.
We also have our 18% pref e-commerce lending fund, which we're closing that out because we're getting close to a year of having that fund open. We'll have a second version of the fund where it might be like a 12 or 14% pref, depending on how much people invest. I'll probably launch in a couple of months. And then we always have real estate
Wow.
developments in Dallas, like constantly. We have about $500 million that we could develop in Dallas right now. So that's been really exciting. Just so many relationships with bankers,
Absolutely.
lenders, even other developers are just handing us their deals right now. So if they got too much on their plate, so that's been really good for us. And then we're going into the world of trading bots probably this summer. And I'd mentioned life settlements before in a previous virtual summit. That's where you buy
Hmm.
somebody's life policy. For example, let's say if you had a $10 million policy, but you had heart failure, I might be like, "Hey, Sachin, let me just give you 3 million. Just make you the beneficiary. So when you die, you get 10 million, right?" So like, there's a way where you could. It's all nothing is risk free, right? But at some point, somebody's going to die, and you're going to get more than what you paid for. So it's a pretty low risk fund, and a lot more people are cashing out right now. So it's a good time to launch that fund. And
Hmm.
just really anything. We have a corporate bond fund that's coming out right now. So bonds, I could show somebody a chart where corporate bonds outperforms the S&P from 1989 to now. You'd have like
Hmm.
33% more money if you just invested in corporate bonds. But access is an issue. So now we fixed the access thing so people take part of corporate bonds. So
Sure, sure.
yeah, a lot of cool things. We're looking into about 19 different asset classes right now. And
Wow.
we're the ones that make the most sense with the least amount of risk. We're pulling the trigger on
Okay. So all this investment opportunity you're talking about is it's from Baluch Capital itself, was it? It's a
Right.
different umbrella, different
So
verticals, or
the umbrella is Baluch Capital for all of it, but
okay,
under Baluch Capital, we might have different. It might be a fund, it might be a SPV. We might have an LLC that just does factoring. For example, another thing where we were factoring COVID kits at 10% a quarter, so that's like
Mm,
40% return a year, right? Because the emergency mandate that's happening right now until I think it ends like November of this year or something like that. So
mhm.
they all fall into different categories, but Baluch Capital is the umbrella company for all of it.
Okay, sounds good. So yeah, again, I mean, this is definitely very very amazing things we are learning, and hopefully we can connect with Amir and learn more about it. Um, I guess I'm trying to. I wanted to ask you in all this investment, you said 19 different asset class. If you don't mind asking you, what would be the minimum amount that people can invest?
It depends. Sometimes, depending on circumstances, it could be as low as 50,000. But we have
Okay,
some where the minimum investment is 1 million. I think the average is going to be around 100,000. Will get people
okay,
in the door. But there's also different class shares as well, depending on how much people invest. So
sure.
they're always diversified. We diversify in our class share
Abs-
as well.
Absolutely. Because the reason I was asking, I was actually interested to hear about this biotech now to 6.2x in 5 years. Man, that's amazing. It's about
We got some awesome
600%
things.
return.
It's
Yeah,
it's just some amazing, amazing products. Like, we're actually helping the world. Remember, I was talking about Ikigai. Like, literally, we're making money, but we're changing the game. Especially
absolutely.
in the cancer world, the diabetic world, and the cardiac world. We have some amazing technologies that just make sense. So,
Absolutely. I agree. So listen, I would have another question for you right now. And I was thinking, what is the biggest win in your life and how you define success?
what was the first part of the question?
What is the biggest win in your life?
Oh, when? Okay.
Yeah,
Huh.
how you define success.
Well, let me think here. So, for the biggest win, it'd probably be a tie between actually getting into medical school, especially when I was rejected and then you get it, you feel really good, when something you feel was yours was taken away and you have to fight to get it. And then I think another one is uh, when I was applying for places to work as an anesthesiologist, not only did I get my top city, but the number one group that I wanted to be with here in Dallas accepted
Wow.
me as well. So I was lucky. I just had one interview and acceptance pretty quickly within a couple of weeks, and I was done. So
Wow.
not a lot of headaches, not a lot of travel or interviewing. I got like basically everything that I wanted at the end of the day. So that was a huge win. And also, my parents wanted to move to Dallas. They wanted to get out of Midland. They just never had the money. So it was always my parents' dream to live in Dallas. So it just
Okay.
happened. My number one job opportunity that I wanted was in Dallas, and within a couple months, I moved everybody there. So that whole aspect of moving to Dallas for work had multiple wins in it. For my whole family.
Sure. Absolutely. How do you define success?
So success, uh, I think you had to break it down to different categories because you could have success in relationships, you could have success in business, you can have success on a spiritual level. So I think people need to break it up. On the financial level, you probably people will just say, hey, you're successful when your passive investments are bringing in more money than your expenses. Then you've reached some type of economic independence, right?
Right.
And for personal relationships, I think I'm successful here because I brought everybody to Dallas. I got my parents a condo. They live 5 minutes from me. My brother lives 4 minutes from me. I got him a condo too. Like within 5 minutes, I could access the most important people in my life, right? So I think
Absolutely.
relationship wise, I'm successful there. And then another success, just in general, is when it comes to your job and your main purpose in life is finding that ikigai. And you don't just have to have one. being a doctor is one, and being like a wealth manager is another for me. Those are two things that I really, really like. So I know a lot of people are like, oh, what's this one thing you got to do? I don't think you need to limit yourself to one thing. Like, you can do a couple of things. You don't want to do like 100 things, but you could do a couple of things pretty well, as long as like you're fulfilling this ikigai purpose, and you're helping
Absolutely.
other people. You can make a living off of it. People need it, and you enjoy it. So that you can enjoy
Absolutely.
more than one thing in your life. When you find all those things, that's success as well.
Absolutely. Thank you. Yeah, absolutely. I totally agree. And I like the breakdown though. So,
Yeah.
and I guess we are, believe it or not, Amir, we're towards the end of our show today. And I have probably one last question here. So, where can people find you, and how can they get hold of you and learn more about you and, co-invest with you? And also, I want you to share one thing one thing that you want to share today to our, listener.
Okay. Well, to find me is pretty easy. I'm on LinkedIn. That's one way to get me. Another thing where I want to do for all your listeners, do something special. If you
Oh,
go
thank
to
you.
baluchcapital.com/dream big. Okay,
Really?
uh, you guys can get a free copy of my book. Just cover the shipping, and you guys can learn. It's kind of like gives an overview of at least how I think about wealth management and finances. And everybody I've talked to has found at least one or two things that really change the way they invest. So, and we're actually updating the book too, so there'll be another update. So,
So I need a signed copy, by the way, from you.
yeah, no problem, man. When you come down to
Thank you.
Dallas, I'll sign it right in front of you, no problem.
Oh,
So,
thank you.
so yeah, you
Yeah.
guys can go to that website or find me on LinkedIn. And then
Mhm.
what was the last question you were asking?
So, what is the one thing you want to share before you leave?
One thing I want to share. Well, people are watching this podcast, and they want to dream big and think big. Believe it or not, you're probably not thinking big enough. Like people really, and this is actually from Tony Robbins. Okay, people overestimate what they can do in a year, but they
Hmm.
underestimate what they can do in a lifetime. So
Yes.
you're going to be alive for a while. You got some years. You don't have to start doing something tomorrow, and don't stress yourself out. Like, what if you wanted to be a fund manager? What if you wanted to do mission trips all over the world and do medicine like that? Like, what if you want to open up a coffee shop? Like, it doesn't have to happen in a couple of months or even a year, even a couple years. Even my journey is multiple decades, right?
Absolutely.
So as long as you enjoy the process, set some really big goals, and you actually can be more motivated when you have a bigger goal, and hang around like-minded people like me and Sachin that will support you in your goals. So that's the one thing I'd want to share with people is, whatever you think you want to do, whatever you think your dream is, like, maybe think about 10xing that, and surround yourself by other people with the same mindset.
Absolutely, absolutely. That was a powerhouse, man. Thank you, Amir, and for your time, giving a lot of resource to our listener and everyone watching or listening. Again, thank you very much for watching and listening to our show today. It's been a pleasure, Amir, with you, and excited to have you, and looking forward to meet you again in Dallas. And I would like everyone to subscribe, like, and share this podcast to your family and friends. Thank you, and have a great day.
Thank you for listening to today's episode of Dream Big and Think Different. We hope you enjoyed it. Please be sure to subscribe to our show so you don't miss any gold nuggets. And we'd appreciate it if you could rate and leave us a review on iTunes, Spotify, and other platforms. Until next time.